Good morning, everyone, and Happy New Year. My name is Gareth Soloway here at verifiedinvesting.com with the game plan. It is a new year, and oh boy, there's stuff to talk about. We have Bitcoin making a big move up, breaking towards my target of that 48 to 50,000 range, possible ETF approval. We have the stock market beginning to crumble here early in the day. I'm going to get into it all. So let's go right into the charts. And this is the kicker, guys. When you talk about charts, you have to understand these year kind of end kind of shenanigans that get played. And what I mean by that is basically what you had was end of year window dressing and also this kind of feeling that no one wanted to sell because they didn't want to pay taxes in 2023. So what happens? We come into 2024 with volatility at historic lows going back again. You look at the VIX, we're talking about the VIX being at levels not seen before COVID, before the COVID collapse. And what happens this morning? Futures are tanking. All right, we have big drops across the board in the equity markets. And number one, look at this chart. What are we seeing here? So we see the 10-year yield is beginning to spike. Now, if you remember, and this was a great call from last week, guys, we talked about how the 10-year yield had swung too far to the upside like a pendulum and had then swung too far to the downside in the opposite direction. And what did I say last week? I said somewhere in the middle is where it's headed. I think this pivot point right down here around 4.5% is where that equal kind of dead-on zone should be. And that's exactly what it looks like happening. Now, what's fascinating about this is that you have a scenario where into year end, we had all the makings of things that would cause a sell-off. The Middle East was getting kind of a crazier and crazier. The Russia-Ukraine war was still going on. We have data coming out left and right except for jobs that was not good. Remember, we've talked about consumer debt, buy now, pay later, spiking dramatically. We have the U.S. debt now hitting basically 34 trillion. All the makings of kind of a catastrophic potential scenario was there, but no one cared. No one cared. And I always say this, the market only cares when it cares, meaning that people will ignore things while it's beneficial to them. As soon as it's not beneficial, they will then bring it back to the forefront and the markets will get crazy. So essentially what we had was all of a sudden, and by the way, 6 p.m. last night, New Year's Day, New Year's evening, I should say, the futures opened up. The S&P futures were actually up initially on the day. And then somewhere in the overnight, early morning period, all of a sudden we saw the yield begin to spike here and go to the upside. And the US dollar starting to spike as well. If we zoom in on this, take a look at this spike in the US dollar getting back above technical now resistance. And what's the culprit here? I mean, what's going on? And the answer is very simple. All of a sudden, people, number one, they're like, okay, we held on, but we know that historic values of stocks are overbought. So we didn't want to pay taxes in 2023. So now we look and say, oh, well, now we're in 2024. I could sell today and I don't have to pay those taxes for another year. Woohoo, that's great. And so they say, okay, now what's the reasoning behind this? Well, oh, it looks like there's some, Iranian war boats coming into the Red Sea. Oh, okay, let's use that as a reason. And basically this is what it is, folks, is that you have this kind of mentality of people that they want to do actions, but then they have to justify it, or the media has to justify it. So now all of a sudden you have, the Iranian boats coming in. There's been more bombings back and forth between Ukraine and Russia. Maybe that's escalating. And people, this didn't matter. Like if all this news had happened last week, it wouldn't have caused any issues in the markets. The markets would have stair-stepped slowly neutral to higher, right? But because it's a new year and people now want to sell and take some of those profits, it now becomes an issue. So now you have the US dollar popping to the upside. And again, what's important here is that this is telling us that, again, there is a run to safety. When the dollar goes up, it tells you there's a run to safety. I don't think this is because necessarily the Fed is all of a sudden going to be tightening interest rates even further. That's not going to happen, right? I think they're on pause. I do think the market overreacted. But again, the markets are now beginning to price in, okay, wait, maybe we went too far too fast. We know the 10-year yield did the same thing. And now they're beginning to price in a little bit of instability globally at the start of the year. So here we have the makings. We know that when the dollar goes up and yields go up, what does the stock market do? It goes down. Okay, so now that we've covered that, and number one on the US dollar, I am watching this level. We confirm below, so I want to see if we confirm back above. If we confirm back above, that could be a failed breakdown, and one of the methodology points that I teach is that when you have a failed move, meaning that a breakdown or breakout fails and reverses, the opposing move can be pretty dramatic. So this is something we definitely want to watch on the US dollar. Now going back to the 10-year yield, this never confirmed below, so it's not as big of a deal. I still think though we're headed back to kind of this 4.4, 4.5% level on the 10-year yield. Now remember, why are people kind of eager to sell? Well, valuations got stretched. The NASDAQ, I mean, think about this, guys. The NASDAQ had its biggest up year in 2023 since 1999. I think, again, even if you weren't born or you were very, very young in 1999, you probably heard, and I was there, I remember the tech.com collapse that occurred afterwards. So there's a lot of kind of signals out there that something is lurking. Now, whether or not we see a collapse in 2024, we'll have to see. I still think 2024 will actually be an overall down year when all is said and done, and I do still believe that we are headed into recession. Everything but the jobs market is aligning for that. Now we just have to see at some point the jobs market crack, and I think that will happen probably within the first quarter of 2024. All right, so let's go to the S&P 500. And if we look at the chart of the S&P 500 here, guys, I've talked about these trend lines quite a bit. We've talked about how you have pivot points all along here that were telling us that the S&P was into resistance plus the double top right up there. So on a technical basis, you know, putting aside the economic data, putting aside the overbought, putting aside all the things that really tell us that the market was due for a pullback, the charts, if you just look at these charts alone, you can see we were into technical resistance right up here. All right, so again, that looks like it's starting to play out just a little bit here. Now, I will say this, is that when you look at the NASDAQ, remember, already took out the all-time highs. That is the tech sector. That's the AI boom. That's all of those things. But the reason why I think it's worth keeping an eye on is this next chart. And this next chart, they look almost identical, right? So you have one chart over here and one chart over here. And what we can see on these charts is that you have the big move up, the big move down, and the big move up making a higher high, right? Higher high, right there. Here you have the same thing. Big move up, big move down, big move up, higher high. Now, the difference maker is that this chart is Bitcoin in 2021, and this is the NASDAQ in 2023. Well, basically from 2021 to 2023. But my point is, again, is that these things tend to repeat, and look at the identical patterns. And so I would be very cautious here that it does tell me that there is a chance that the NASDAQ making new all-time highs, getting people even more bullish. And remember, that's part of the psychology of the market, is to push people to extremes, to make them think that nothing can take down the stock market, nothing can take down crypto. All of those emotions getting all long. Once everyone's long, who's left to buy, right? And you could say, oh, there's a few people, but it's really once a majority of the money's long, then that's where the move starts. So that's why, or stops, I should say. And that's why it's such a big momentum mover, where once you get too bullish, it tends to go the other way. And that's why I'm a contrarian trader once you get to these extremes. All right, so again, we have the NASDAQ up here making new highs. It is down today over 1%, so just keep that in mind. I don't know if this is the start of a bigger move or a little just of early year profit taking. I would tend to think early year profit taking. I'm not sure if we're ready to roll over significantly yet, but I do think we have to watch the charts to let us know. One of the things I'll be watching on the NASDAQ, guys, all right? We just talked about this. In fact, I'm going to go back to one big chart here and get rid of this here because I do want to show this. Okay, so here's going back to the NASDAQ on a bigger time frame. We are on the monthly chart. So what I'm going to be watching very carefully on this chart, guys, is do we get back below this previous high up here? So again, on a technical basis, this high here and this high, right? We are higher. So I want to see, do we have a daily failure of this breakout? Because technically you could say, okay, well, you have, and I'm not drawing this perfectly, but you have a breakout on the daily, the weekly, and the monthly chart. So what I'm watching for is this a breakout that fails? And by fails, do we come back and confirm back below this level on those time frames? If you do, remember what I said earlier on in the dollar chart is that we had broken below, now we confirm below, now we're back above. The biggest moves come from failed moves. All right, so again, if this is a failed breakout here and we start going back down here, that would tell me that it's most likely the Bitcoin-ish chart, which, by the way, replicates on natural gas. I mean, you can go, literally, you could scan charts and you'll find these patterns over and over again. Because remember, it's human psychology. It has nothing to do with buyers and sellers and earnings and this and that. It's all about you and me and what's in here. What's in here are emotions that are driving us. And that tends to make things repeat over and over again. It's why technical analysis works. Okay. And by the way, when I say works, always remember, and I say this always, but always remember it's probabilities, why it most of the time works. Okay, a couple charts to go over today. We have Apple. Apple's getting crushed. Magically today, Barclays comes out with a downgrade to sell. All right, to a sell rating on Apple, talking about weakness here and there. I would just counter this with saying what I have said in these game plans for the last month, 2 months, that Apple's revenues quarter over quarter are declining, their earnings are declining. I mean, basically we've seen Apple stall out, yet somehow magically Apple was back to all-time highs. If we go to the daily chart, and again, this is the beauty of technical analysis, guys. Look at this, okay? So this is your daily chart of Apple. Here was your previous all-time high. Look at it pierce the all-time high here and fail. That's a classic double top. So on a technical basis, and what's so interesting about this is into year end, a lot of the technicals weren't making sense because the volume was so light and there was this inherent, want to not sell into year end, like I mentioned, because of tax reasons. Now, all of a sudden, we even saw it still play out last year into the end of the year. Apple still pulled back, but now you're seeing Apple coming down here. Now, I do have a buyable level for us that I'm going to be watching with the live trading room at InTheMoneyStocks.com where I day trade live with people. And there's a level right down here, just below 185. There's a gap fill right there. That's my first level on my radar today for a potential day trade. Second level would be right here, this major pivot, which is right around the 180 level. All right, so again, we'll be watching that very closely. 185 pierce, and then right around 180 to 181 on the charts. All right, just a couple other charts I just want to refer to here because I've been kind of setting the table for this, guys. And again, it's always interesting because you see all the people that are just so bullish, which is fine. But you have to also categorize it with the chart patterns. And one of the chart patterns that I've been telling you guys about to be wary of is the Microsoft chart pattern. This is a classic bear flag development with major trend lines. If I zoom out on this chart, what do we see here, right? We see, literally I could go out so far and you could see going back here, look at that trend line, look at that trend line. Where did they converge? Right at the high of the chart. And I'll zoom back in so you guys can really see it again. Okay, we're going to zoom in even more. Okay, there it is. They converged right in this range. And what ends up happening? That's the short-term top, the down move, and look at your flag pattern development right here. That's a classic flag pattern. And again, we know what bear flags usually do. Probabilities dictate there's most likely a down move coming. Now, is it starting today? We'll find out. I want to see where the markets close, what the volume is today, then also how does the market react tomorrow? So again, it's not so much about saying, oh, today tells you everything. No, to be honest, a good technician is always looking at the data every single day because every single day you get a new candle on the daily chart or whatever trading time frame you're doing. And that is very important because a new piece of the puzzle comes out. Does it still look like a bear flag? Does it now negate the bear flag? Does it break out? Does it break down? Does it confirm? All of these questions every single day you have to re-ask yourself to decide what's going on. Now, right now, this is a classic bear flag. And especially considering the rally into year end, the fact that Microsoft was not breaking higher to me is a negative signal. It should correct. Where would be first support? Probably somewhere around the 340 to 350 level. I think right in this vicinity right down there. That would be kind of a little bit of an area to keep an eye on. Another chart to keep an eye on. Take a look right here. What do we have? We have NVIDIA, and the NVIDIA chart again, guys. Take a look at these levels. We have a perfect parallel here. I actually added in another parallel right here. Pivot point to pivot point to pivot point to pivot point. I continue to be bearish on NVIDIA, folks. And AMD already said they're coming out with this super chip. All the other semiconductors, and there's a lot of semiconductor companies, they're all working on AI. Margins for NVIDIA have been amazing the last year, and they will continue to be amazing, but just a little less amazing as we go forward until the margins crash and you have an overabundance of AI chips. And I know that sounds crazy at this point, but within a year, you'll see an overabundance of chips and margins will crash. And I've talked about this before, but same thing happened to Tesla, right? Tesla was the only great electric vehicle on the roads for a while. They had amazing margins, and then all of a sudden, all the competition threw out a lot of other ones, and Tesla had to cut their prices, their margins shrank, and all of a sudden, Tesla wasn't doing so well. It wasn't at all-time highs anymore. In terms of chart levels, we can clearly see right here on NVIDIA, right through here. So this would be your first support. If that breaks, we have a midpoint level right here. You can see the dotted line. I hope you can see it. That's right around 375. But eventually this year, I think we will go back to this parallel line, wherever that may be, whether it's at 250, 225, 300, wherever that line is, at some point this year, I do think NVIDIA revisits that level. By the way, don't forget that NVIDIA was around $120 stock early in 2023. Really remarkable to think about the move that stock made. All right, taking a quick look here. This is a Coinbase chart, but I actually want to flip over to this one real quick here, guys. What we see on this chart on Amazon is more parallels. Now, the beauty of this, guys, is that this is the Lux Algo parallel channel indicator. So again, I actually like to use this now more and more because it beautifully shows and draws the parallels for me. And I just want to show you guys, look at that beautiful one right there, which tells me right through here, right through this area, where's support on this. If this dips in the next few days, you're going to start hitting support around 144. All right, so going back to center screen, I do want to thank Lux Algo. They do sponsor me, guys, and they do have many useful things. I love the parallel channel because you guys know that's one of my favorites, but I do suggest taking a basic look at what they have, and I will wait for about 30 seconds here, and I'll be right back.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, we're back, guys. Let's get right into it. So Bitcoin, I'm sure everyone's waiting on Bitcoin analysis. Now, you're hearing a lot of talk about a breakout above that 44.8 level. Yes, that's true. Bitcoin has broken out. The latest news that I'm hearing is that the spot ETF will be approved this week. Now, if that doesn't happen, be careful because there's a lot of downside potential. But I'm still in the camp that it does get approved. I've told you guys in these game plans over and over again that you have upside to $48,000 to $50,000. One thing to keep in mind, though, you are hitting resistance today on the chart. Now, resistance can be broken, right? But take a look at this, guys. Look at this line right here on the chart of Bitcoin. Take this pivot to this pivot to this pivot to this pivot, and what are we hitting right here? Just above 45,000 at approximately, what is it, at 45,500 or so? We're right into this level. So again, you do have resistance right here. Does it push through on the approval later this week? My guess is it will initially, and then I still think it reverses back down. And again, that's the expectation there. If I zoom in, you guys can see, and again, just to really show these lines more accurately, take a look. If I zoom in, and you can see, again, 45,700 right there, and the high was really close to 46. But notice it goes right through there and then right into that level. So again, Bitcoin hitting some resistance here. Let's see if it can push through. I ultimately still think even if it goes to 48 to 50, we still at some point revisit the 30,000 level, folks. And again, that'll be a buying opportunity for me on the charts if it comes back to that level. I just want to show you quickly the Ethereum chart here. The Ethereum chart I showed you last week. We have a beautiful channel. Ethereum has struggled. It continues to struggle. It is still stuck in this parallel. So again, if we zoom in, and I'll show you guys if we zoom in how clear it looks, but look at that. If we zoom in all the way in here, look at that, how it's right up against these levels here, right here, here, and today, kissing that level up there. So it is still stuck. Ethereum is stuck in this channel. That, by the way, shows you how important channels are to price action. They really can do a major job of keeping price stuck between these levels. It's amazingly impressive. Looking at gold, guys, gold is fractionally higher today. This is the weekly chart on gold. The reason why I'm showing you the weekly chart is simply to just impress upon you guys, you have this beautiful line here. We still have not broken out. We are very close to breaking out. We tried here and it failed. We are now right up against that level again. I do think this breaks out. I've talked about the inverse head and shoulders here, right? Classic inverse head and shoulders. If you do the measured move, you should go up to about 2,500 and change. And that should occur this year, should. Okay, so again, target remains around 2,500 and change for 2024 on gold. I have accumulated a fair amount of gold myself, and I continue to hold for further upside. Oil, let's talk about oil real quick. So oil initially was sharply higher overnight into this morning. It has fallen back a little bit. If we take a look here on the daily chart, let me just zoom in a little bit here, guys. The daily here, this candle today, you can see there's a long wick to the upside. We've come back in. Again, this kind of Iranian, worries about the warships in the Red Sea and stuff like that. But I will say this, guys, is that the U.S. is now the biggest producer of oil in the world. And at this point, Middle East issues will not have as much impact on oil as they once did. It just isn't going to happen. The U.S. is too much of a behemoth. I mean, think about the U.S. It's now a bigger producer than Saudi Arabia, than Russia, than all of these other ones. Something like 13 plus million barrels a day of production. And so what that does is it insulates us and the U.S. from things that are going on overseas a little bit. There's more stability here. And ultimately what that also means is that if we do hit a recession, the recession in the U.S. will mean more to oil prices in terms of going down than instability in other parts of the world. All right, lastly, I just want to quickly touch base on natural gas. Natural gas is rocking and rolling here, guys. So again, you guys know I've been a fan of natural gas. And I've talked about accumulating a position in natural gas. We are now nicely in the money in themoneystocks.coms. We bought verified investing alerts. We bought UNG. I think our average is something like 502 or something on that, and it's 535, 540 now. So it's nicely moving into the money. And again, we just had the dollar cost average a little bit. It's why the power of the dollar cost average is so key when you're swing trading. It's very important as an investor or trader to understand that when you go into a position, the probabilities, even using technical analysis of you nailing the exact low, are very small because there's too many inner working things. There's, inventory numbers. There's instability globally. There's year-end maneuvering, all this different stuff. And so what you have to do is you have to be honest with yourself and say, listen, I am not perfect. I'm not a perfect trader. All right. Therefore, I'm going to cushion it by buying a starter position, and then allows me to dollar cost average down. And that is the way you get your win rate north of 80%, guys. It's doable. It's doable for each and every one of you. You learn how to read charts. You understand pivot points. You do everything I do in these game plans, and you can get there yourself. So again, guys, I encourage you to continue to learn. There's so much good education out there. Make sure you follow someone who does have good education. And I do strongly encourage you to just, and as I flip back to the center screen, really focus in on making 2024 an amazing year where you learn how to read charts very simply. You don't have to do a lot. Look at my charts. I don't have crazy indicators on there. I don't even have moving averages on these charts. You don't need them. You just need to understand where the lows, where the highs are, the parallels, connect the dots essentially. Remember when we were kids and we connected the dots on those little things and drew different things? That's all you're doing with charts. It's not hard. It takes a little dedication and study, but everyone can do it, and it changes your financial future. So on that note, folks, I'm going to say goodbye. We'll see you tomorrow, 9 a.m. Thanks for tuning into the game plan, guys. Take care.
Do you have an existing IRA or retirement account?
iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is, they make it simple. All you have to do is transfer your preferable amount of USD through iTrust and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.